Let's go, guys. Here we go. It's Wednesday, March 18th, 2026. Let's freaking go. Y'all can see where I just created that thumbnail. I don't give a fuck, dude. Look at it. Look at this, look at this heat map. We got the, Jerome Powell talking about he might raise rates. He might stick around. He might not even go away. What do you think about that, guys? My God. The developments. The developments. Let's look at the markets. Here we go. Let's look at the heat map first and foremost. We got Nvidia down 0.84%. Got Broadcom down 1.67%. AMD holding its head above water at 1.6%. Intel up 2.2%. Amazon down 2.48%. Procter and Gamble's down 3.15%. Now look at this. Visa and MasterCard are down 3.06%. Visa's down 3.06% and MasterCard's down 3.57%. We'll probably look at those. That could be fun. I want to see something really standing out, you know what I mean? Here's one. What's that? Amphenol Corporation down 7%. No, down 5.41% today. So there's some that are down quite a bit. AbbVie. GEV. Is that GE? GE Vernova? No, it's something else. Look at that. You're watching in real time, guys. This is GE Vernova Incorporated. Check it out. We're just going to get right into it. Here we go. GE Vernova Incorporated, it's sitting at $858. No, $855 in after hours right now. Yeah. Over the past 5 days, it's up 2.85%. Over the past month, it's up 5.1%. Yeah, 5.1%. Let's start that over. So GE Vernova is currently sitting at $855.12. It's up 1.31% today. Over the past 5 days, it's up 2.85%. Over the past month, it's up 5.01%. Over the past 6 months, it's up 40.5%. Year to date, it's up 31.35%. Over the past year, it's up 169.17%. A 5-year chart, it's up 527.77%. Look at that. Maximum chart goes back to 2024. It's up 527.77%. Would you look at that? Got a 52-week high of $894.93. 52-week low of $252.25. Where was that sitting at? It's close to its 52-week high right now. It's got an EPS of $17.70. It pays a dividend of 0.23%, so 50 cents a quarter, with a PE ratio of 48.51. Huh. GE Vernova climbed approximately 7% over the past month, driven by a significant 2026 revenue guidance raise and a rare double upgrade from analysts. Market consensus projects continued momentum next quarter, supported by a massive $150 billion backlog and surging AI-driven demand for grid infrastructure despite lingering wind segment losses. The bullish view. Strong backlog and guidance raise. The company increased its 2026 revenue guidance to 44 billion to 45 billion. To between 44 billion and 45 billion, and raised free cash flow expectations to over $5 billion. This optimism is underpinned by a $150 billion backlog, with gas turbine capacity largely sold out through 2028 due to unprecedented power demand from AI data centers. Enhanced shareholder returns. Management recently doubled the quarterly dividend to 50 cents per share and increased its share buyback authorization to $10 billion. These moves reflect strong confidence in cash flow generation from the electrification and power segments, which are seeing organic growth rates between 16% and 20%. Strategic infrastructure positioning. Analysts increasingly view the company as a critical AI infrastructure play rather than a legacy utility supplier. High margin slot reservations and a 100% ammonia combustion milestone for gas turbines demonstrate technical leadership in a market facing acute power and grid bottlenecks. The bearish view. Persistent wind segment losses. Despite overall growth, the wind segment remains a significant drag on earnings, with projected EBITDA losses of approximately $400 million in 2026. Ongoing operational vulnerabilities, including installation challenges at major projects like Vineyard Wind, continue to pressure the company's consolidated margins. Stretched valuation multiples. The stock's rapid 150% surge over the past year has pushed its forward PE ratio above 50x, which some analysts consider rich compared to industrial peers. Some DCF models suggest the stock may be overvalued by approximately 21% on intrinsic cash flow projections. Executive stock sales. Multiple high-ranking executives, including the CEO of the power segment and the chief commercial officer, engaged in share sales during March 2026. While often routine, these transactions can sometimes signal a near-term ceiling in internal confidence following the stock's massive rally. Let's go back and look at the earnings. So we've got on January 28th, 2026, they beat earnings by 310%. 310.91% beat. They were projected to get $3.14, and they got $12.91. Damn. Damn. So they also beat on revenue by 7.05%. They were predicted to get $10.23 billion. They got $10.96 billion. Very interesting. So here's some insights from the latest news reports. GE Vernova exceeds Q4 estimates. GE Vernova reported a massive beat with adjusted EPS of 13.36 against the $3.14 estimate and revenue of just talking about the beat here. Revenue of $10.96 billion, exceeding the $10.23 billion forecast. Okay. Guidance raised following strategic acquisition. The company raised its 2026 revenue guidance to $44 to $45 billion and free cash flow outlook to $5 to $5.5 billion, incorporating the impact of the Prolec GE acquisition. Significant one-time tax benefit. The substantial EPS beat was largely driven by a $2.9 billion one-time tax benefit related to a U.S. valuation allowance release, which significantly boosted net income. Record backlog and order growth. Total backlog reached a record $150 billion by the end of 2025, driven by a 65% organic surge in Q4 orders, fueled by data center and grid infrastructure demand. Okay. Segment performance divergence continues. While the power and electrification units saw robust growth and margin expansion, the wind segment remained a drag with projected EBITDA losses of approximately $400 million for 2026. So we'll look at a few of the last times that they missed. They missed EPS in Q3 of 2025 by 18.56%. That's the one where they just crushed it by 310.91%. And then it goes back to Q4 2024. They missed EPS by 43.95%. And they missed revenue by 1.34%. And then right before that, in Q3 2024, they missed EPS by 116.56%. And then they missed in Q2. And then they missed in Q1 of 2024 by 82.8%. Very interesting. And that's GE Vernova. Let's go down and read an article about them. Where am I going? What am I doing? There we go. has here's one. This is 55 minutes ago. So this is Simply Wall Street, reviewed by Bailey Pemberton. Has GE Vernova run too far after its 156.4% one-year surge? Here's a little overview. This article explains in plain terms whether GE Vernova's share price reflects its real worth or if expectations have run ahead of fundamentals. GE Vernova's stock recently closed at $858.47 with returns of 1.3% over 7 days, 7.0% over 30 days, 26.3% year to date, and 156.4% over the last year. Recent coverage has focused on GE Vernova as a pure play on energy transition and grid technology following its separation from General Electric. This has helped frame the stock as a focused capital goods business rather than a diversified conglomerate unit. Commentators have also highlighted how this cleaner story may be influencing how investors think about its risk profile and long-term potential. Despite the strong share price performance, GE Vernova's valuation score currently sits at 1 out of 6. The next sections will break down what different valuation methods say about the stock and then finish with a more holistic way to think about what fair value really means for you. Well, look at that. Let's read it. See if it'll let us read it. Very cool. Approach 1. Approach 1. GE Vernova discounted cash flow analysis. A discounted cash flow model takes projected future cash flows, then discounts them back to today to estimate what the business could be worth right now in present value terms. For GE Vernova, the model uses current last 12-month free cash flow of about $3.95 billion and a set of cash flow projections that extend out to 2035. Analyst estimates run through 2030, such as $4.69 billion in 2026 and $10.8 billion in 2030 and later years, are extrapolated using Simply Wall Street assumptions. Each of these projected cash flows is discounted back to today using the two-stage free cash flow to equity approach. Jesus Christ. On this basis, the model arrives at an estimated intrinsic value of about $672.07 a share, compared with the recent share price of $858.47. That gap implies the shares trade at around a 27.7% premium to the DCF estimate. In other words, the model indicates that GE Vernova is overvalued relative to the cash flow assumptions currently included in the forecast. Result: overvalued is what they say. Our discounted cash flow analysis suggests GE Vernova may be overvalued by 27.7%. Okay. Got a little graphic there for you. Okay. Approach 2. GE Vernova price versus earnings. For profitable companies, the PE ratio is a useful way to think about what you are paying for each dollar of current earnings. It quickly links the share price to the business's ability to generate profit today. What counts as a normal or fair PE depends a lot on how the market views a company's growth potential and risk. Higher expected growth or lower perceived risk can justify a higher multiple, while lower growth expectations or higher risk usually point to a lower one. GE Vernova currently trades on a PE of 47.38x. That is above the electrical industry average of 31.54x, and also above the peer group average of 45.7x. Simply Wall Street's fair ratio for GE Vernova is 73.44x, which is proprietary estimate of what the PE might be given factors such as earnings, growth profile, profit margins, industry market cap, and company-specific risks. This fair ratio can be more informative than a simple peer or industry comparison because it adjusts for those company-specific characteristics rather than assuming all firms deserve similar multiples. With the current PE of 47.38x sitting below the fair ratio of 73.44x, the shares screen as undervalued on this metric. And you've got a little graphic here. Okay. Upgrade your decision making. Choose your GE Vernova narrative. Earlier, it was mentioned that there is an even better way to understand valuation. Narratives let you turn your view of GE Vernova into a simple story that links assumptions about future revenue, earnings, and margins to a forecast, then to a fair value that you can compare with the current price on Simply Wall Street's community page. Different investors may, for example, see GE Vernova as worth around $538.80 at the cautious end, or around $1,019 at the optimistic end, and have those fair values updated automatically when new news or earnings arrive. This can help each investor decide whether the stock looks expensive or cheap to them at any point in time. For GE Vernova, however, we will make it really easy for you with previews of two leading GE Vernova narratives. GE Vernova bull case, fair value $912. US versus price versus fair value, around 5.9% above this narrative. Fair value based on the recent $858.47 share price. Revenue growth assumption 9.9%. Frames GE Vernova as a toll booth on the AI power buildout with a large backlog and gas turbine slot reservations underpinning visibility on future projects. Highlights electrification and power segments as key earnings drivers, with Prolec GE integration and transformer demand linked to data center build, while wind remains a drag but is absorbed by other divisions. Uses a forward PE based approach, applying 32x multiple to projected 2027 EPS to arrive at a $912 fair value, and treats the company as a backlog driven power equipment supplier. Okay, that makes sense. GE Vernova bear case. Fair value $819.92. Price versus fair value around 4.7% above this narrative. Fair value based on the recent $858.47 share price. Revenue growth assumption 14.83%. Sees long-term support from electrification, decarbonization, and grid software demand, with a growing installed base feeding higher margin service and software revenue. Flags risks from wind segment losses, tariffs, large project exposure, and restructuring execution, which could all affect margins and earnings stability. Anchors fair value around an analyst consensus target of about $652.19 and an updated model fair value of $819.92 based on assumed revenue growth, margin expansion, and a future PE in the low 30s. This is not financial advice. This is not even my opinion. This is their opinion. So, what do we think, guys? What do we think about GE Vernova? Sounds kind of interesting. Pretty cool. Let me know what you think in the comments, guys. Very cool. Very nice. Let's run through the major indices. They're freaking down. That's where they are. So we've got the Dow Jones Industrial Average is down 1.63% to 46,225.15. So here we go. S&P 500 is down 1.36% to 6,624.27. Not really measured in dollars, I guess. The Qs are. The Qs are sitting at $594.90, down 1.39% today. Over the past 5 days, they're down 0.85%. Over the past month, they're down 1.8%. Over the past 6 months, they're down 0.07%. Year to date, they're down 3.16%. On a 1 year chart, the Qs are up 25.36%. 5 year chart, they're up 89.98%. The Qs, going back to May 7th, 1999, is up 1,023.09%. So, there you go. If you're scared, there you go. The NASDAQ. Alright, NASDAQ is at 22,152.42. Down 1.46% today. Over the past 5 days, it's down 1.13%. Over the past month, it's down 2.64%. Over the past 6 months, it's down 1.42%. Year to date, down 4.69%. Over the past year, it's up 26.56%. Over the past 5 years, it's up 67.63%. And going back all the way to 1986, it's up 5,845%, 45.36%. Bitcoin. Bitcoin. Bitcoin's down. Down 3.53%. Over the past 5 days, it's down 0.06%. Over the past month, it's up 5.2%. Over the past 6 months, it's down 39.04%. Year to date, it's down 18.4%. Over the past year, it's down 14.22%. Over the past 5 years, it's up 22.81%. On a maximum chart, it's up 15,611.67%. Oh, Bitcoin. Oh, Bitcoin. Crude oil. Crude oil sitting at $98.26. Up and down and all around the last few days. You can see on a 6-month chart, it's up 55.33% here. Actually, on a 1-month chart, here we go. Let's just read the whole fucking thing. Here we go. Crude oil, sitting at $98.26, is up 2.93% today. Over the past 5 days, it's up 2.95%. Over the past month, it's up 51.05%. Over the past 6 months, it's up 55.33%. Year to date, it's up 71.13%. Over the past year, it's up 47.21%. Over the past 5 years, it's up 59.93%. But you can see it's been higher. It's been higher. Back in June, on June 3rd, 2022. On a maximum chart, it is down 1.31%. June 3rd, 2022. All right. What made crude oil spike on June 3rd, 2022? It's important to understand the historical context of why there would be a big old spike like that. I don't remember off the top of my head at all. 2022? Yeah, it's like probably Russian-Ukraine war or something like that. Something crazy. Let's see it. According to Gemini, on June 3rd, 2022, crude oil prices jumped due to a combination of high seasonal demand, a weaker U.S. dollar, and ongoing supply anxieties stemming from the Russian-Ukraine war. WTI crude closed at $118.87 a barrel, gaining about $2 on the day, while Brent crude also hovered near its highest levels since the initial shock of the invasion earlier that year. Key drivers of the spike. High seasonal demand. Investors were reacting to the start of the summer driving season in the U.S. despite record high prices at the pump. Demand for gasoline remained resilient, which placed upward pressure on crude. China reopening. Markets were anticipating a massive surge in demand as major cities in China like Shanghai began to lift strict COVID-19 lockdown restrictions. OPEC skepticism. Although OPEC had just agreed to increase production by 648,000 barrels per day for July and August, traders were skeptical that many member nations, like Nigeria and Angola, actually had the spare capacity to meet those targets. Supply disruptions. European Union leaders had recently reached an agreement to ban 90% of Russian oil imports by the end of 2022, ensuring that the global supply crunch would remain a long-term issue. Interesting. And you can see they have a little graphic here with WTI crude at $118.87, Brent crude around $119.72, and natural gas there at $8.52 back on June 3rd, 2022. Very interesting. Heat map, beat map. Red. Red dead. It is rough out there, boy. The Parker Hannifin. Hmm. Alright. So we're looking pretty cool. Let's look at Bitcoin. Bitcoin's at $71,130.84 right now as we speak. Ethereum's at $2,193.29 right here as we speak. Tether is over here at $1. One big dollar for Tether. XRP is at $1.46, up 5.12 percent on the day. No, over the past 7 days. Sorry about that. It's down 4.32% on the last 24 hours. No bueno. All right. Let's see what's trending on the crypto one that's trending right now. Ethereum is in second, with World Mobile Token as the next kind of wacky one. So World Mobile Token's currently sitting at a little over 9 cents. The fuck? There we go. Over the past 24 hours, it's up 2.13%. And over the past hour, it's down 0.34%. Solana's over here at fourth on the trending thing. Solana. Am I tripping? No, I'm not tripping. Solana, yeah, okay, I'm alright. Thought I was tripping there for a minute, boy. But no. Okay, I think we've covered quite a bit here, you know. Let's look at AbbVie's charts. Uh-oh. My heater's on. Okay, we're back. Give that a second to shut off. Woo! Hmm. Trying to wait for my heater to shut off. It's got like all this background noise. I guess it's never gonna shut off. I just turned it off. Crazy. Alright, here we go. I think this will be the last one. We've done enough. I'll read through this. Parker Hannifin Core. And I'll edit videos from about 8 to 9. And then I'll go to work. So here we go. Parker Hannifin. Sitting at $912.40. It's down 8.53% today. Nope. I'm tripping. Parker Hannifin. Sitting at $912.40. It's up 2.14% today. Over the past 5 days, it's up 0.48%. Over the past month, it's down 8.53%. Over the past 6 months, it's up 20.74%. Year to date, it is up 3.8%. Over the past year, it's up 48.02%. Over the past 5 years, it's up 193.33%. On a maximum chart going back to 1986, it's up 10,049.05%. They got a dividend of 0.79%, $1.80 a quarter. PE ratio of 33.28, EPS of $27.41, with a 52-week high of $1,034.96, a 52-week low of $488.45. So it's a little closer to its 52-week high than its 52-week low. We got 2 articles about it here. We'll read one of them here in a second. Let's go check out the earnings. So back on January 29th, they beat by 6.4% on EPS. They were predicted to get $7.19. They got $7.65. They were estimated to get $5.07 billion of revenue, and they beat by 1.99%, getting $5.17 billion in revenue. Okay. So we'll go back and just see the last time that they missed. They missed in Q3 2025. They missed by 0.55% on revenue. And then in Q2 of 2025, they also missed by 1.18% on revenue. Okay. We'll read this at a glance here. Parker Hannifin surpasses Q2 earnings estimates. Parker Hannifin reported adjusted EPS of $7.65, exceeding the estimated $7.19, and record revenue of $5.17 billion, which topped the $5.07 billion forecast. Full year 2026 guidance raised significantly. The company increased its fiscal 2026 adjusted EPS guidance to a range of $30 $2.40 to $31 and raised its organic sales growth outlook to 4 to 6%. Positive market reaction to results. Following the earnings release, Parker Hannifin's stock rose 4.66% in pre-market trading, eventually reaching new highs as investors reacted to record margins and cash flow. Aerospace segment drives record performance. The aerospace system segment achieved 13.3% organic growth and a 31.1% adjusted operating margin, marking its 11th consecutive quarter of double-digit growth. Acquisition strategy enhances market presence. Management highlighted the planned acquisition of Filtration Group Corporation, which is expected to deliver $220 million in cost synergies and expand its footprint in life sciences and HVAC markets. Operational efficiency offsets inflationary pressures. Adjusted segment operating margins expanded by 150 basis points to 27.91%, supported by a robust pricing strategy and cost management that successfully mitigated commodity price fluctuations. Okay. Pretty cool. All right. Let's read an article about them. So, just something I'm noticing here. They only have 2 articles written about them. One in the last 11 hours ago and one 16 hours ago. That's interesting to me. We'll just read this one, the first one, the latest one written. So this is Parker Hannifin at Bank of America Conference, Strategic Insights by investing.com. No, I guess we won't be doing this one. I guess it'll be this one. Look at that. Acmea Investment Management, BV, increases stake in Parker Hannifin Corporation. Written by MarketBeat on March 18th, 2026, so just earlier today. Okay. Acmea. Alright. Acmea Investment Management raised its stake in Parker Hannifin by 79.3% in Q3 to 28,731 shares, worth about $21.78 million. Analysts are broadly positive, 16 buy versus 5 hold, giving a consensus rating of moderate buy and a consensus price target of $995.37, with Wells Fargo recently lifting its target to $1,050. Parker Hannifin beat results with $7.65 EPS versus $7.11 expected, and revenue up 9.1% year over year, and it declared a quarterly dividend of $1.80. So $7.20 annualized. Okay. Here we go. Acmea Investment Management, BV, raised its position in Parker Hannifin Corporation by 79.3% in the third quarter, according to its most recent Form 13F filing with the Securities and Exchange Commission. The fund owned 28,731 shares of the Industrial Products Company stock after acquiring an additional 12,707 shares during the quarter. Acmea Investment Management BV's holdings in Parker Hannifin were worth $21,782,000 as of its most recent SEC filing. 3 names to watch as home builders. Bro, what the fuck? Other institutional investors and hedge funds also recently added to or reduced their stakes in the company. Berkshire Asset Management LLC PA lifted its position in shares of Parker Hannifin by 1.1% during the third quarter. Berkshire Asset Management now owns 1,208 shares of the Industrial Products Company's stock worth $916,000 after purchasing an additional 13 shares during the last quarter. Bridgewater Advisors increased its holdings in Parker Hannifin by 2.3% in the third quarter. Bridgewater Advisors now owns 567 shares of the Industrial Products Company's stock valued at $473,000 after buying an additional 13 shares during the last quarter. High Net Worth Advisory Group raised its stake in Parker Hannifin by 0.3% in the third quarter. High Net Worth now owns 4,694 shares valued at $3,559,000 after buying an additional 14 shares in the last quarter. Asset Dedication lifted its holdings in Parker Hannifin by 2% during the third quarter. Asset Dedication now owns 702 shares of the Industrial Products Company stock worth $532,000 after buying an additional 14 shares during the last quarter. Finally, Valeo Financial Advisors lifted its holding in Parker Hannifin by 0.8% during the second quarter. They now own 1,833 shares of the Industrial Product Company's stock worth $1,280,000 after buying an additional 15 shares during the last quarter. Institutional investors and hedge funds own 82.44% of the company's stock. I'm going to tell you right now, I hate the way this is written. Drive me nuts. A number of research analysts have recently commented on the company. The Goldman Sachs Group reiterated a buy rating on shares of Parker Hannifin in a report on Thursday, January 29th. Wells Fargo and Company boosted their target price on Parker Hannifin from $1,000 to $1,050 and gave the stock an overweight rating in a research note on Friday, January 30th. Wall Street Zen raised Parker Hannifin from a hold rating to a buy rating in a report on Wednesday, February 4th. Weiss Ratings restated a buy rating on shares of Parker Hannifin in a report on January 22nd. Finally, IA Financial set a $1,032 target price on shares of Parker Hannifin in a research report on Thursday, the 29th. Thursday, January 29th. 16 analysts have rated the stock with a buy rating and 5 have assigned a hold rating to the company. Based on data from MarketBeat, the company has an average rating of moderate buy and a consensus price target of $995.37. Damn. Alright, we're gonna read this one, then we're done, bro. I gotta go. I gotta go to fucking work. This is getting crazy. Alright. Insiders place their bets. In other news, COO Andrew D. Ross sold 4,664 shares of the business's stock in a transaction that occurred on Wednesday, February 11th. The stock was sold at an average price of $999 for a total value of $4,659,336. Following the completion of the sale, the chief operating officer directly owned 13,120 shares in the company, valued at approximately $13,106,888. $880. The trade was a 26.23% decrease in their position. The sale was disclosed in a legal filing with the Securities and Exchange Commission, which can be accessed through this hyperlink. Also, VP Danu J. Perel sold 1,316 shares of the company's stock in a transaction that occurred on Monday, February 2nd. The shares were sold at an average price of $950.05 for a total value of $1,250,265.80 following the sale. The vice president directly owned 6,534 shares in the company, valued at approximately $6,207,626.70. This represents a 16.76% decrease in their ownership of the stock. The disclosure for this sale is available in the SEC filing. In the last 90 days, insiders sold 10,063 shares of company stock valued at $9,891,214. 0.32% of the stock is owned by company insiders. Alright, that's enough of that. That's a long ass article. And it's kind of just reiterating the same stuff over and over. So, Parker Hannifin, what do we think, guys? Is it a buy? Is it a sell? Is it a hold? Are we buying Parker Hannifin? Let me know in the comments. Alright. So, you know, you got the Iran stuff going on. You got Jerome Powell talking about what he's talking, some crazy stuff he's talking about sticking around, or raising rates potentially, stuff like that. So yeah, who knows what's gonna happen, really. But the world's not gonna end. There's money to be made, stocks to trade, games to be played. All right. So, yes. Let me know in the comments, what do you think? Like and subscribe. That's enough. That's enough out of me. That's enough of my rambling. I gotta feed my dogs. I gotta get ready to go to work.